Good morning. This is Steve Hoffacker. Welcome to another one of our regularly scheduled webinar programs, Continuing Education for the Aging in Place Professional. I have a good program for you today. One of the questions we get frequently is about financing improvements. Where's the money? Do I qualify? What do I have to do? So we have a couple of specialists today dealing with FHA financing. Mike Grossman recently completed his CAPS, and we got to talking, and he introduced me to Clayton Miller, who's going to do the presentation today. So I think you guys are in for a treat. So Clayton, or Michael, if you want to take it away, and then we can go from there. And it is being recorded. If you have questions, put them in the chat, or go ahead and interrupt us. But sit back and enjoy. Thank you. Mike, please.
Thanks, Steve. Once again, I'm Mike Grossman, and as Steve said, I'm a recent graduate. Aging in Place has been an interest of mine for the last couple years. I come at you from the home and commercial inspection business. A different take on aging in place. I think I was the only inspector in the courses that I took with Steve, but it's always been an interest, both from a personal experience standpoint and then as a business opportunity. And so for the last couple of years, I've been also a HUD consultant for renovation projects, whether someone's buying a new home and wanting to renovate it or renovate their existing home. And I happen to come across Makeover Mortgage Program and the company, and been with them for a couple years and done some projects with them. I have a couple going on now. And I thought Clayton Miller, who is Mr. Makeover Homes, have him come and talk with you today about ways to finance and get your aging in place projects funded. Help your clients find alternative ways or different ways to get the project done. So I'm going to stop talking and turn it over to Clayton, and hopefully I know he'll do a great job. Hopefully you guys will have some good questions and he'll answer some for you.
For sure. Well, we'll give it a shot. Thank you for the intro. I haven't been called Mr. Makeover just yet, Mike, so I might steal that one. So kind of like I was saying before we started, Mike's giving me a little bit of background on your guys' program, basically, and obviously correct me if I'm wrong here, but coming in, trying to help people figure out how to age in place. The name's perfect. But basically, proof your homes to allow you to grow old, to allow more accessibility, allow you some of the things that happen later in life that maybe aren't happening to you now, or helping out with some potential restrictions down the road. And he brought this to my attention, I don't know, a month ago, 2 months ago, whenever it was, and it was really cool because we've done things like this in the past. We also help folks on the VA side. So we've had a lot of VA jobs where maybe somebody was disabled, where they became wheelchair bound, and we went into that house and widened doors and included ramps and dropped countertops. And I was like, this is a very similar, trajectory, very similar concept here. So just to give you a brief background on me, we don't want to talk about me. We want to talk about how to get you guys financed, but just to give you a little background, I come from the contractor space. I come from the realty space. The HUD consultant space. The only thing that we haven't done is the actual lending, been a mortgage officer. But outside of that, built the homes, sold the homes, done HUD consulting for homes. And we do anywhere between 500 and 700 projects a year currently. So we see a lot of this. So that's kind of where this whole thing developed. Was we wanted to help people either buy houses and roll a renovation into the cost of that purchase, or take your own home and use some of the equity in your own home to do a renovation and create a new mortgage. So that's where the name, Makeover Homes, the Makeover Mortgage process came from. Is our program is based around getting a new mortgage in some form or another, whether we're buying a new home or whether we're refinancing our own. So this presentation that I've got is pretty well tailored to, what is this process in general? It's not directed specifically towards the Aging in Place program, but it's going to be very close And I'm going to try to throw some examples in there about, to make it a little bit more like-minded. So again, Makeover Mortgage process, we help find a lender. We help with the consulting. We help with the realty. We help with the contracting. We can help with all 4 pieces or just one. It depends on where you're at. But that's kind of our spark notes, if you will. So how does this process work? And this right here is going to look a little bit tough to see at the moment, but this is a pretty good summary explanation on how a program works. So when a client goes out and they want to buy a new house, and I could see this as being one of the 2 ways or 3 ways or 4 ways that any of your guys' clients potentially want to get a new house and then get it, age in place certified. I don't know. Do you guys have a term for it? Getting it, I don't know.
No.
Improved, age in place improved, or
No, not really.
whatever term. So
Yeah.
I could see maybe one of your clients is wanting to downsize. And when they downsize, they at the same time want to get it ready for their future lives and what could happen. So roughly, this is how it works. A client gets pre-approved for X amount of dollars, and that is the amount of money that they are able to go shopping with. Okay. So the way that it typically works in traditional real estate is I can approve for $350,000. I'm going to go find a $350,000 house. Not how it works here. When we get approved, and it looks like my example here is $250,000, but when we get approved for $350,000, our clients are then able to go find a house that's worth $200,000, and now they can put $300,000 or $150,000 into a reno. They could find a house that's $300,000 and put $50,000 into a reno. Either way, they get pre-approved for X amount, and then they get to spend that, a combination of buying the house and then doing the reno. The real big benefit on our side, and one of the things that we preach, is if you're a regular home buyer out there and you buy a $300,000 house, and then you later want to put $50,000 worth of work into it, you're paying a 20% down payment on $300,000, and then you're coming out of pocket another $50,000 to do that reno. Well, the way that our program works is because you lump the 2 together, you're coming 20% out of pocket for the whole kit and caboodle. So the down payment on this program is much, much, much smaller. The other way that this can work is if you are a refinance style program. So maybe you've owned your house for 20 years. I don't know. You only owe $100,000 on it. My guess is a lot of the people in your guys' program are going to be later stage. So maybe they only have a handful of years left on their mortgage, whatever it might be. And because of that, they've probably got a good handful of equity in their home. So the other portion of monies that can be tapped into is, again, let's use a $350,000 house that they've purchased. They only owe $100,000 on it. Well, they now have $250,000 worth of money to tap into, to be spent on this style of renovation. So there's the 2 different options. It's, do I want to buy a new house and roll my reno into the mortgage, or do I want to take my existing home and dig out some of that equity and create a new mortgage and use some of that money, some of that funding? Makes sense for the most part. I see what I think are some get it faces, but I also see what I think are maybe some I've got a question faces. I see somebody, well, it looks like you're asking a question, but I don't hear anything.
No, you keep going. You're fine.
Oh, just keep going. Okay. So the way that our process works, actually, I'm just going to skip this. Well, I'll give you a brief one. So there's several different types of renovation loans that are available. Okay. So we can do this with an FHA style loan. We can do it with a VA loan, kind of like we were talking about a moment ago. We can do it with a conventional loan. And we can even do like a USDA. So if you've got a house that's way out in the middle of nowhere, there's all kinds of different loans that your client can get into depending upon their situation, where they live, what they're wanting to accomplish, what their ratings are, if you will. So we've got a bunch of different loan types, and then you've got basically 4 main players. Now, these aren't going to be exactly the players that you guys may or may not end up with, depending on the situation. But for the most part, we're going to need a lender. Lender's going to be who gets your client pre-approved. We call them borrowers. get your borrower pre-approved. How much money can you spend on your new house, or how much money can you afford to borrow right now on your existing home? Then you're going to maybe or maybe not work with a realtor. If you're buying a new home, of course, we're going to want to work with that realtor. Reno refis, if you're refinancing a current one, won't need it. Next piece of the puzzle is going to be what's called a HUD consultant. So that's kind of where Makeover comes in. That's where what Mike's training went through with us. And that's going to be one of the pieces if your client uses an FHA project. The HUD consultant's job is basically to be a third party set of eyes and ears for the bank, for the contractor, for the borrower. He kind of plays in the middle of this triangle. And what he's trying to do is he's trying to be the eyes and ears for the bank, so that the bank knows what they're lending money on. What's this project? What's this house look like? He wants to consult the borrower. Hey, this looks like, this contractor's bid looks good. Hey, here's some things you should do to this home. And then he's ultimately responsible for taking pictures of completed work and getting that contractor paid. And then, of course, you want to be on the team with the contractor to make sure the contractor's doing the right stuff, getting all of his answers or his questions answered, getting his bid in the proper format for the loan, all of the above. So the HUD consultant is more or less the quarterback of this process. And we'll kind of get into what the HUD consultant does here in a slide or two. So as far as the Makeover Mortgage process, who's it for? Again, this is not tailored directly towards the aging in place, but it can be used by pretty much anybody. There are very few restrictions. So, you got your residential home buyers who want to do a fixer-upper. You can even do multifamilies. My guess is you guys likely won't get into the multifamily world, but technically you could. You can use this process on a building up to 4 units. An investor can do it a non-owner occupied style. And then, of course, your typical homeowner who just has something that they want to do to their house. So those are, the different players that you're going to be working with. And obviously, there'd be a 5th box here for an aging in place style member who wants to work on their home in this, specific fashion.
Clayton,
Yes.
if I could add to that, the multifamily, we have some situations where a person or couple or whoever is aging in place or have had a traumatic illness or injury, modifying, doing some renovation to their home. But they also, you might be in a situation like you might have a duplex where a home health aide might end up living, a caregiver might be living in what you turn into an apartment, whether it be a traditional duplex or multiplex, or you actually create that space within the single family home.
Oh, yeah, a duplex would be sweet, a sweet idea if you wanted to live near a relative like you're suggesting. Yeah, I mean, you can go up to 4 units. We see duplexes, we see triplexes. I looked at a 4-plex last week with a client who they want to do the exact same thing. They want to fix up 3 units, and then they're going to live in one of them. So in this instance, yeah, you fix up 1 unit to make it livable, if you will, and then mom and dad or son and daughter, whomever, live in the other. So yeah, multifamily could certainly work out. We've already talked about, kind of who's involved, and this is kind of your general trajectory. Again, so and I'm going to go through these a little brief because I've hit on them to some extent already, but basically, number 1, need a loan officer. And we can get you guys introduced, or rather get your borrowers introduced to loan officers. They get your client pre-approved. They take care of the paperwork. I assume most of everybody on this call has probably been through the home buying process at this point. You guys all more or less understand how that loan officer works. Next piece is your realtor. This is kind of an interesting one. We typically tell our clients to look for a realtor who has some renovation background. So working with any kind of realtor out there doesn't always fit the bill, fit the budget, so to speak. Because if they don't have the ability to see the vision, if they don't have the ability to look for comps in the area based on what this house could be, it could make it a little bit tricky to shop properly. So in this instance, if one of your borrowers is going to be buying a new home, trying to find somebody who's got a little bit of reno background is really, really helpful. Obviously, this seems like a good idea for an aging in place certification. From a realtor's perspective, if a realtor knows what this certification looks like, they can help somebody find a house that could be easily converted, if you will, or have the ability to see the things that need to be converted. So we work with any and all realtors every single day. But if I have the option to suggest which realtor should I work with, I'm always going to lean towards a renovation, backgrounded realtor.
Steve, do you have any knowledge of any agent in place realtors? Is that a common thing that you run across?
We have a fair number of realtors, real estate agents who get their CAP certification. Yes.
Yeah, I could see that. That could see it being a nice carve out, nice little niche,
Mhm.
really. And if you couple the aging in place certificated realtor, certified certified realtor, along with this program, we can make it really easy for them to create a special little niche in that community, and they can teach people how to do this. And we do presentations to realtors, kind of like this. I do presentations to realtors, the Keller Williams, the Tuckers, all the above, all the time, to try to show them how this process works. So if that's something that any of your realtor team would be interested in, by all means, throw them our direction.
Okay.
Next person, like we were saying, and this is where Mr. Grossman comes in, the HUD consultant. So step one from a HUD consultant, he's going to walk the property and he's going to see what the current status of the home looks like. So not quite what a home inspector does, where they're getting on their hands and knees, they're in ladders, they're in, attics, all the above. We don't quite go that far, but we tour the property and we want to see, what's our baseline? And then what do we need to do to get this house safe? What are the current, major issues that need to be addressed? That's typically what FHA is looking for. Loose handrails, chipping, flaking paint people don't like, missing floor, uneven floor, cracked drywall, foundations, yada, yada, yada. Big giant list that they go through. After they go through that list, then they talk to the client and they go, what do you want to do? So here's my list of what you have to do. What else do you want to throw in here? And this is where you guys would come in and go, okay, we need to drop our countertops. We need to widen these door frames. We need to, I don't know all of your guys' specifications and rules, but you guys get the point. We want to add this list into our renovation as well. So now Mr. Grossman is going to go, okay, here's what you have to do to satisfy our loan. And then here's all the stuff you wanted to do. And hopefully the stuff you had to do list is short. That's the idea. Once they get that list put together, that is what's handed off to contractor 1, contractor 2, contractor 3, however many estimates a borrower would like to get. It's up to them. Typically, when you're purchasing a new home, trying to get 1, maybe 2 bids is all you're going to have time for. If you are going to be doing a refinance, you're not working against the clock. You can get this project done as soon as you want to. So if you need to get 3, 4, 5 bids, you can. Once we do get a bid back from that contractor, it's now the consultant's job to make sure it tackles everything that the client wanted. So this is again where we consult that borrower and go, hey, you asked me for this. The contractor is giving you this. Do they match? It's kind of the HUD consultant's job to speak borrower, but also speak contractor, and make sure that what the borrower thinks they're signing up for is actually what they're signing up for and what they're getting. So Mr. Grossman plays a vital role in making sure the borrower is on the same page and knows what's going on. And then we produce some paperwork, send it off to the lender, and then that's what the appraisal is based off of, and we move on with our day. Then, of course, you got the contractor. Arguably, one of the most important parts here, the guy swinging the hammer, wearing the tool belt, throwing the tape measure, working with a contractor who's familiar with the renovation loan process. Huge. Huge, huge, huge. Because of that, over here at Makeover, we have actually started seeking out, finding, and training contractors on how this system works. There are some additional nuances, additional paperwork. Bid has to be in a specific format. There's some pieces to the puzzle from a contractor perspective that having a previous knowledge of is going to give you a huge leg up. So we would highly recommend, if you're not going to work with one of our guys, you work with somebody who's done it before. So contractor is very important. And really, I mean, I think, and I could be wrong, and this would be another good question. Do you have many aging in place certified contractors? Is that a trade that seeks you guys out?
Yes.
So that could be an interesting duo. If they already do the aging in place concept, know all those rules. If we then got them certified to be a contractor on our team and taught them the ropes and they went through our course, that's a really dangerous isn't the correct word. Now that's a really qualified guy to step in and help people through this process because they know both sets of rules, which would be big. So contractor, super, super important. Got to have that piece. And obviously the borrower, and I think this is my finger at you. This must have been one of my presentations to borrowers. And I bring that up on purpose because educating the borrower up front on how this process works, I can't even explain how important it is to try to get rid of all of the unknowns in the future so that we aren't shocked and there aren't any surprises down the road is huge. So we try to do our best. We've got videos, we've got all kinds of presentations that we can share with clients to teach them how this works, but having a good borrower who knows what's going on, very, very helpful. So there are a lot of pieces to the puzzle. It sounds complicated when you look at it like this. We try to compartmentalize it the best we can. So I've already talked about this one a little bit as well, but this is the basic guideline. Get pre-approved, go shopping, get under contract. We like to have a Mr. Grossman, who's a home inspector also, go in and inspect the home prior to the HUD consultant doing the HUD consultant's work. Because like I said, they get in the crawl space and they get on the roof and they test all the outlets and they make sure the rest of the home is in good shape before we show up. So an inspection, highly recommended. Then the HUD consult, contractor bid, appraisal, we get it closed and we move on to the end of the show. So I could go through each individual piece with you. Like I said, with the borrowers, I really get into the nitty gritty on, what kind of house is it that we're looking for here? There's the traditional home shopping, and then there's our kind of shopping. Our kind of shopping, we're kind of looking for the diamond in the rough, if you will. Because of the way the financing works, we want to take a house that's maybe on the underside financially of the market or of that neighborhood, and we want to bring it up to snuff with all these other nice homes around it. So you kind of got to shop, again, like an investor or like an investor would. So we kind of get into house shopping a little bit. Once we get under contract, how we need to get to moving. This whole thing, and now I'm breaking it out into days, because that's always a question for folks. How long does this process take me? What's it going to look like? So once we get a house under contract, Mr. Grossman shows up 2 to 5 days to do a home inspection, typically. HUD consultant's going to be 3 to 6. So about a weekend, we've got a home inspector showed up and a HUD consultant shown up. Contractor is a big one. Contractor is going to take anywhere between a week and 3 weeks, depending on how big this project is. We're used to doing big additions. We're going to add 1,000 square feet. Those kinds of projects are going to take a little bit longer to bid out. Depending on the level and the amount of renovation being done by your guys' suggestions, they may be able to put together a bid in a couple days. So it may not take too long. Once we have that bid, again, appraisal time. Appraisals right now, do you know the answer, Mike? We're looking at like 2 weeks to get an appraisal. Probably about 2 weeks for an appraisal, a week to close the loan, and then we get the project started. So that's kind of your speed run, your test drive through, what our process looks like, how it works, how we get Mike and the HUD consultants involved, and how I think it could certainly be a good financial tool for you guys and your borrowers moving forward.
Clayton, I'd like to add a couple points and then have you speak on one thing.
Yeah, by all means.
Of course, I always recommend a home inspection, and Steve and I have had conversations. There might be 25 to 30 inspectable points that are important to renovation, such as if the house was built in the 80s, there's probably no ground fault protection in the kitchens. Things like that. So if you're looking at an existing home that's being renovated, for aging in place for whatever reason in preparation, those things you want to address. You want to update the plumbing when you can. You want to update the plumbing, the electrical, possibly HVAC, maybe some structural, because you might be making structural changes, widening hallways, doorways, etc. So those are things that are important to always recommend to your clients. Hey, let's get a home inspection and find out. Let's make sure we've got all the hidden things discovered and take care of it at this point. The other thing is, Clayton, if you could touch on the changes coming, I think November 4th, regarding the funding and goods and bads to that.
Got it. So what is it? So, dang, that's close. That's a month and a half. So November 4th, and this happens, I think it's about once a year. FHA HUD will deliver a newsletter basically saying, hey, we've heard all these complaints over the previous year, for lack of better words, and here's what we've done, excuse me, to adjust the numbers to make this thing work what we think is better. So sometimes they do good upgrades and sometimes they aren't so good, but it is what it is. So as of November 4th, the main changes, and Mike, please let me know if there's one that I miss here that you want me to talk about. The main changes are they have increased the price for a HUD consultant to come out there and actually do the HUD consultant's job. So that's going to range anywhere. It's all based on the cost, or the suggested cost of the renovation. And that's going to range anywhere between, I think it's like 800. No, it's like, it'll bump up to $1,000 and like $2,000 is kind of the guess. And that pays for that consultant's time to show up to the house, set up the job, build a scope of work, take photos, measurements, and kind of and run the consultant game up to closing. So those prices right now are somewhere between $500 and $1,200. So pretty considerable jump coming on the 4th. This is a necessary fee for some of the loan types. So if we're going to use an FHA loan, consultant's going to be needed. If we go conventional, sometimes it won't be. VA, sometimes it won't be. And USDA, sometimes it won't be. It's kind of lender dependent. So that happens November 4th. The other thing that happens, there are actually two types of renovation loans on the FHA side. And those are called the FHA 203K Limited and the FHA 203K Standard. The FHA 203K Limited allows clients to do work on their homes, no structural work, at a cost of up to $75,000, where a HUD consultant is not required to be used. So that removes that added cost. But in my opinion, you also lose out on that added consulting. So, is that something that's likely, that I think should be, worth spending some money on? Yeah, I get an extra third-party guy who knows what he's doing to kind of be a buffer between me and my contractor, who maybe or maybe isn't, being straightforward with me. I mean, unfortunately, contractors have the reputation that contractors have for a reason. So to have a consultant standing there in between the two saying, hey, buddy, that HVAC system, ain't no way that should cost $24,000. What's going on here? Those are some of the things that HUD consultants are looking for. So you can go all the way up to $75,000 not using a HUD consultant, and then the standard kicks in anytime we're doing structural work, or we're going to be going above $75,000. That's when the HUD consultant will be involved. So I think those are the two major updates as of November 4th. Mike, let me know if there was another ruling in there that you wanted me to bring up or talk about.
Oh, just one more thing. So Clayton, I have a client that wants to just renovate their bathroom and bedroom for aging in place. And I'd like to do this program. And my HUD consultant came out and said, I got to do all these other improvements to the outside and inside the house. Am I required to do that if we're just doing the bedroom and bath?
Yeah. Well, maybe. Okay. So again, there's different types of loans, and these different types of loans have different sets of rules. So when it comes to using an FHA loan, which, the FHA loan is going to be used for those guys who have a lower credit score. Maybe they've got a not so good debt to income ratio. Maybe their income is a little bit lower. Those are going to be the types of folks that have to use the FHA style. That type of loan does come with required items. So if I just want to work on my kitchen and my bathroom, sorry. I mean, maybe if there's nothing else wrong with your home, then yeah, we can do that. But it's a HUD consultant's job to tour the entire home, the exterior and all the interior rooms, to verify that it meets FHA minimum property standards. If you've got a little bit better borrower, and they want to use the conventional loan rather than the FHA, those rules go pretty much out the door. Now, as a HUD consultant, what we're doing is we're showing up and we're looking for anything that's like major. We're going to look for large mechanicals that maybe aren't working. We're going to look for large foundation issues, maybe big roof problems or water intrusion. We're going to look for big things, but all the little ticky-tacky stuff that FHA requires us to call out, we're going to leave that alone unless the client would just like to take care of it while we're out there. So good question. Depending on which style of loan you're using, some things could be required and some things may not be required.
Mike, or Clay, I have two questions for you.
Yeah.
Does this second program you're talking about, does that work with the cash out refinancing program?
No, it'd be a separate financing tool. We are not able to say, hey, we want to do this reno, but we also want to pull out 50 grand cash at the same time.
Well, the 50 that you pulled out would be to use for the renovation. I said, can you combine that?
No. Try me one more time.
Okay, so the cash out, so you're pulling 50,000 out, and you want to take some of that and use it for the renovation and then pocket some risk. Does this program work for that?
No. Okay,
Okay.
so the main difference, and this is a very good question, the main difference between a cash out refinance and our refinance is that a cash out refinance takes the value of the home as it sits.
Mm-hmm.
And then you're able to borrow against that equity. So if for whatever reason, maybe we've got a borrower, they just bought their house, I don't know, a year ago, 2 years ago, whatever it might be. And they haven't built a bunch of equity into that home yet because they haven't had enough time to make payments, but the market's done well. So we've added a little. That client doing a cash out refi, maybe they can pull out 10 grand. Maybe if the market was very favorable, there's good comps in the area.
Mm-hmm.
However, with our program, they're going to do an appraisal based off the after renovated value. So if we show up and we put in a new kitchen and we put in 2 new bathrooms and we put a new roof and window, whatever it is, everything that we do is going to be adding value to the home. And now that appraiser is going to appraise the home at what it's going to be worth. So instead of only having 10,000 bucks to pull from, we've got 40, 60, 80, 100, depending on what that after renovated value look like.
Okay. Right.
So that's the big key, especially from a refinance standpoint, is for those people who don't have a ton of equity in their home already, we can grab some of the future equity that we're currently pushing into it rather than just being stuck with what we've got today.
Okay. Second question, how does someone find a HUD consultant independently? If they say, I think I want a HUD consultant to get me started with the process, how do I find one?
Well, right now, if you want to work with one of ours, all you have to do is go to makeover-homes.com. And in the top right corner, big giant button says order a consultant. Actually, can I just drag my screen over there and show you? Yeah.
Okay.
Let me zoom out a little bit. So makeover-homes.com. And then right here, order a consultant, and you can just start pecking away. The things that we're going to be asking for are just contact information. Who's your lender? Who's your realtor, if you have one? Do you have a contractor yet? Yes or no? What's your property address? That kind of thing. And that's how we get your order in, if you will. And then we get you introduced to whoever the closest consultant in your area is. Okay. So that'd be step one. If you want to check out where we have coverage, we do have a coverage map that'll show you all the locations. We're not everywhere, but we do cover a lot of the big major cities. Okay. If for whatever reason we do not have coverage in your area, which totally could be, then what you may have to do is just go to the FHA 203K HUD consultant website. And there they have a list that you can search for by state. And it's got the guy's name, location, and phone number. Whether or not they're active, we don't know. There are some names in there that don't work anymore. They don't do consulting, whatever it might be. We believe starting here is the way to go. And if we don't have coverage, then you can go elsewhere. Anybody else?
Oh, Question, how do you become a HUD consultant?
So HUD actually, they established the guidelines that are very, very, very vague. They provide no online application. They provide no online training whatsoever. It is a list of a couple documents that they don't even provide. They don't provide the documents, but it's a list of things that they want you to somehow prove to them that you know how to do. So they want you to prove to them that you know how to do an SOR. It's the type of paperwork that we have to provide. They want you to prove to them that you can do a draw, feasibility study, all these different things that without going through a course or being taught, like you never know. But at the same time, they don't provide the training. It's a pain in the butt. So the main prerequisite to begin your journey down with us. So we actually, we seek out, find, and train home inspectors, just like Mr. Grossman. But the main prerequisite is you have to be one of two things. You either have to have 3 years of home inspection experience. So you have to be a licensed home inspector for at least 3 years, or a licensed general contractor for at least 3 years. We have found that going after and recruiting the home inspectors really fit our bill a whole lot better. The way that our program works, the way that our softwares work, it's a lot more tailored to and works out from a home inspector perspective better than it does contracting. So we reach out to home inspectors. They hop on our team. We've got about a 16-hour online course that teaches you all about how's a 203K work, what's a HUD consultant do, what are all those minimum property standards that you're out there looking for, how do you produce this paperwork? And then in the middle of our training, it's here's how you get your HUD certification. And we created our own application that is filled out and then sent off to HUD. While we wait for that to come back, it could take anywhere between 4 days and 4 months. And no, I'm not exaggerating. Depends on who's working that day. While we wait on that, you continue to work into our system and see and figure out how to work our app, how to use this new program. Like anything else, there's a new program that tries to keep all of the estimates and the work write-ups and the communication and everything in a nice and neat area for us all to use. So we have a course. Oh, go ahead.
No.
We have a course. There's also a course, a gal down south in Florida does a course. There's a guy on the East Coast, I think, that does a course, then a guy in Chicago who does a course. And outside of that, you just have to teach yourself somehow, some way.
Okay, we had a question about using a consultant for a Title I program. Is that needed, helpful, necessary? What do you suggest?
I'm unfamiliar of what a Title I program.
FHA Title I, it's a grant. Oh, it's a loan, I mean.
I'd have to Google it real quick. We have it. Let's put it this way.
$25,000 loan program, 20-year conventional loan.
Considering we do as many projects as we do, and we have not once been asked to do that, then I would say a HUD consultant must not be required. Could you use a HUD consultant? In theory, yeah. They wouldn't have to do as much. You could just use them as kind of an interim consultant, if you will. They could review some of your paperwork, check out your project for you. But in regards to all the additional paperwork that a HUD consultant has to fill out and create for the loan to close, none of that would be needed. So you just be using them for, brain power.
Okay. Elise, did you have more that you wanted to ask? Okay. Thank you, Clayton.
Cool.
I think one of the, as the HUD consultant, having done some of these projects, Clayton has said this, and I just want to emphasize it. The contractor is the biggest challenge because I have to paint the picture for the appraiser to be able to make that determination on what the home is going to look like after the renovation. And, we struggle sometimes to get contractors they want their hands on everything. They don't want to do paperwork. Yeah. And so the slowdown and the challenges is always the contractor entering the information in the bid package the way it needs to be, line item separating labor and materials, and staying in the program, notifying us when things change orders are requested, that kind of thing. So Clayton's team does an incredible job. That number one, they've got some incredibly smart technological people that have made this makeover home application that we use, that helps us with measurements and filling in these line item things. And all a contractor has to do, I mean, they can use their own bidding system, Exact or whatever they want to use, but we try and encourage them to use Makeover Homes because it helps the process so much. It helps get things, it makes it a lot quicker and easier. When I first started, we did a lot of writing. We did a lot of typing. It was a lot of work. I'm like, oh my gosh. And then having to deal with what the contractor was sending and figuring that together. So, now it's getting so much easier and helpful for us. I'm thinking ahead here, Clayton. We got to get some, figure out adding some components in there for the aging in place criteria in the system. That we can put in and be able to select to make that portion that much easier. But that's a truly important aspect there. And I have no vested interest but my client, and make sure that the client and the borrower, everyone's getting what they expect. And I think that's important to have that third party in there. I've done hundreds of draw inspections in the years that I've done this. In the home inspection, commercial inspection field. And I know how important it is just to have someone in there with a different set of eyes, without those emotional blinders on.
Yes.
And, and saying, hey, something isn't right here. Let's get it fixed, ahead of time. And I think especially important in all of your occupations where you're trying to help people with this aging in place, you got to get it right. You want to right the first time.
And Clayton, do you get into the reverse mortgage at all, or do you have an opinion about who should go that direction or not?
Well, Mike told me you guys have recommended that to some folks in the past, and I'm not really well versed on how the reverse mortgage works, only because I haven't had to be. Honestly, I don't even know the general structure.
That's all right. That's okay. That's a fair answer. And we were going to pick your brain if you did have some information. That's fine.
No, we haven't had to go down that route just yet.
Okay.
Our number one buyer, somebody's really, what it breaks down to is our number one buyer, somebody's looking for a new house, whether it's upsizing or downsizing, doesn't matter. And they know where. I'd say this is a good leading point for me. They know where they want to live. And they can't find the house that's located where they want to be. And I think that's one of the things that we allow folks to do is you're no longer, when you're shopping this way, you're no longer shopping for a house that fits the whole bill. You're shopping for a house where you want the house to be, and you just need to have a good shell or a good start. And as long as you can find something that is 40-50% the way there, you can add the rest. So it really allows people to, if I want to live in Indianapolis in this specific area, by gosh, I'm going to find a house over here. And if it's missing a bedroom and a bathroom, I'm just going to add it on. If I need the ramps, if I need the wider door frames, the whatever it might be, I'm no longer looking for a place that already has any of this stuff. I'm looking for something close, and then I'm going to do the rest. So it's all about giving our clients options and letting them shop where they want to shop, rather than looking for the perfect thing that happens to be in the right location.
If I could piggyback onto that, one of the areas that I'm working on right now is we have, if everyone attending today is familiar with Sun Cities, those are 55 and over communities. And where I'm at, we have one that the main development is over 20, 25-year-old homes now. And so these people, they found their Indianapolis, they found the area where they want to be, and it's right where they're at. However, they've outgrown the home in a sense of it needs updated, and it hasn't met their needs as they age. they really like everything else about the community and their neighbors and everything else. And they don't want to go, they're not ready for assisted living or upping everything, upping their roots and going out and buying a new home or building a new home and going through that hassle, maybe at that point in time in their life. And so in a sense, you know, Makeover Homes does a lot of renovations as well, in that respect, where someone already lives there, they're existing there. I have a current project with Makeover that I actually did the home inspection about 3 years ago. A young couple bought the house and waited until their jobs got better and their financial position, and now they're doing a huge renovation. They're doubling the size of their home. So they might be those type of people who aren't you know, up there in years. They're a young couple, but they certainly could do renovations that meet those agent in place, because everybody could be an agent in place client, is what Steve explained. And so they can do some changes and recommendations on to their contractor on what they'd like in that home. It's actually going to be a pretty nice home for that purpose. So those are some things to consider.
Good
You know,
story. Thank you.
Yeah, this is just a great way for them, a different way of financing.
All right, do we have any other questions for Mike or Clayton? Anyone? Comments? Good information. Shared a lot that I think was unfamiliar and gave us some direction. So excellent. Appreciate all of the insight. With that, I'm going to go ahead and wrap the presentation. Thank you all for coming. We'll see you next time around. If you want to